TheoTrade. This is Don Kaufman. It's July 17th, 2019, and we are just seconds to go to the cash close. And people, if I didn't know any better, on kind of a quiet after the holidays July week, we're seeing some sell-side activity. The S&P's right now down about 18 handles. And again, seeing a little bit of burst of sell-side coming into this cash close. Question is there any volume on this behalf? And the answer is absolutely not. 885,000 contracts. I also want to make you aware that in just moments here, we're awaiting none other than, well, the first of the big tech stocks to release, none other than Netflix. I want to highlight something in Netflix before we go any further here with, again, just seconds to go. It's about a $25 and change expected move. Again, about a $25 and change. We'll just call it 26. What is that? About 7.3% expected move. Again, there's the closing bell. About a 7% expected move. As I said, with Netflix earnings coming out momentarily, that could very well rock the Nasdaq futures. You know, the market cap of Netflix isn't necessarily massive. Nevertheless, the volatility in there absolutely is. So Netflix right here, right now, people, it is all over the place. Again, got to take a look at the bid and offer in the aftermarket. The other aspect I'm going to be pulling up here momentarily happens to be none other than the live news on Netflix. And it is out, okay? The stock right now, as I said, is all over the place. We can also take a quick glance at this kind of in real time in the after hours. Well, the stock was all the way down to 342, but give it a moment because it's getting bid back up. They beat. It's going to be all about subscribers in this particular case. With that, let's close it up. Let's actually take a look back at this in just a few minutes. Again, Netflix was expecting just about a $26 expected move, and they may move that and then some. What I really want to focus on today, I'll tell you what, it isn't so much the S&P futures here, which, again, saw some sell-side activity. Yeah, of course, a lot of people are going to, this is the beginning of what? We need liquidity. We need volume to come back into play before we're going to be calling anything, all right? A few aspects, though, that did, in fact, come to life here. Number one, the S&Ps are down, but the Nasdaq was really kind of strong on a relative basis, and the Dow specifically even stronger. Why? Well, specific to the Dow was none other than Boeing. Boeing closed up almost 2%, which actually carried a bit of the Dow. The Russell, though, happened to once again kind of be the laggard. Now, before I go any further, I want to once again bring up a comparison chart that displays what I feel is quite insightful for the broader market. I've actually got a style built for this. It's just the QQQ, the spiders, and the IWM on a comparison chart. And one of the things that is just striking in this case, again, here's actually the IWM. Everything's color coordinated. A year-to-date basis, now it's not even up 15%, with the Nasdaq effectively up about 24%. But it is, again, the insightful portion of this. Not only isn't the Russell rallying, but it has been for just the last couple of trading sessions effectively breaking to the downside. However, as you start to look at this, you're seeing the exact same thing in the other index products. Again, what do I take away from that? Hey, these are products, okay, that have actually split apart, or what we call have become divergent. All of a sudden, they're starting to move in some relative tandem nature, which is something that we have not seen, okay, much of in the last couple of weeks. And as I point this out in the last few weeks, well, the Russell's been relatively flat, okay. Meanwhile, the Russell's been kind of flat in this territory. The S&Ps have actually cruised up. The QQQ took off to the upside. All of a sudden, everybody is moving cohesively. Keep an eye on that, and that kind of comparison can be insightful as it can kind of dictate, if you will, a shift in the markets. Now, that alone doesn't mean a whole lot, but coupled with the fact that all of a sudden, well, the bonds, they started to rally again. And, you know, I've expected some bond shocks. In fact, this past weekend's video was specific about what I termed bond shocks. That is, this is an incredibly crowded one-sided trade. People have been buying bonds and buying bonds. Okay, the bonds start to sell off. Everybody heads for the door at the exact same time. Okay, with that though, you're going to get some rip your face off moves back to the upside, and we might be on the forefront of one of these. But there's actually one of two ways you could probably look at this bond rallying back up. You could look at it as a little bit of a rip your face off rally. But you can also look at it, are we getting defensive again? Okay, and why would I actually mention getting defensive? Well, there were some earnings that came out that has nothing to do with Netflix. Speaking of Netflix, listen, I'm not looking at Netflix right now on the screen, but I can tell you by the likes of the Nasdaq futures, Netflix must not be faring well here in the after hours. Okay, why again do I say that? It's, well, because the Nasdaq futures have sold off. All right, another 10, 13 points since the cash close. Okay, specifically, here's Netflix once again. Remember, we were looking for about a $25, $26 move. What do you got right now? Every ounce of that and then some, people. We're right now outside of the expected move in Netflix and continue to progress just a bit to the downside. Something I'll talk about tomorrow on TheoTrade. Talked a little bit about it this past weekend. It's about subscribers. If the economy is slowing down, okay, they already raised the price at Netflix. The number of subscribers, it's not a tell for Netflix. It's a tell for the entire global economy. Okay, are people willing to either forego Netflix or even give up Netflix? Subscriber growth means everything for the world economy. Again, all resting on the shoulders of Netflix. Now, another area, as I was saying, there's really some specific sectors that I was looking at today, and push all the different equities aside. Listen, I know Microsoft's even coming out with earnings tomorrow. We should talk about that. Forget it. It's meaningless in the bigger picture. Here's the bigger picture. We had a transportation stock today come out, and it was not pretty. Not pretty at all. So here, I've actually pulled up the $DJT, $DJT. Now, this is not a tradable product, and I wanted you to know that because there's a proxy for it, right? We could use what's termed the IYT, which I'll bring up here momentarily. But I wanted you to see how substantial of a hit that the transports just took today. Now, a lot of the conversation that surrounded the marketplace, okay, you're like, it doesn't make a difference, man. Google's still making money, and this is making money. Yeah, well, the first of the rails came out today. That is ticker symbol CSX. That's CSX Corporation. It's not good. They're actually looking for about 2% revenue growth. Not only did they guide lower, but they guided now a 2% drop, 1 to 2% drop on the year, and it crushed the transports. Now, this is not just CSX, okay? We can actually look at, here, ticker symbol NSC, another rail, gets absolutely hammered today. Mind you, their earnings are still coming up, but whatever, that makes sense. It's another rail, okay? We can look at Union Pacific, yet another rail. They got crushed over here. Now let's get more specific. Start taking a look at UPS, because what the markets are good at is saying, listen, one of the rails is slowing down. The entire economy may be effectively slowing down. UPS, as soon as the rails go, they're not moving as many goods. Why should UPS move as many goods? They actually hit UPS on a percentage basis. It's fairly significant, 3.2%. With that, you should also take a look at FedEx. Okay. Now, the reason I'm bringing up a variety of symbols. Now, FedEx has already been hammered quite a bit. Actually, if you look at FedEx on a year-to-date basis, though, they're now flat on the year. The reason I'm bringing this up, when you start to look at products like UPS is still up about 5%. It's almost like UPS kind of felt this, like they were already pricing this in. Start to go through transports, okay? And I'm bringing up some of the same symbols I just brought up. Start to bring up some of the transports, and you'll see why I'm bringing this to your attention. Do you realize, okay, that, again, NSC is still up 28% on a year-to-date basis? That's just year-to-date. And yet they very well, in the next couple of days, could project slowing growth, slower revenue. Why do you think I bring it up? Because it could be a huge, gaping opportunity. The market did a little bit of damage to it today, but I don't think anybody saw, okay, the slowdown that was coming out of CSX. Take a look through, okay, all of these ticker symbols and just pick it. And when I say pick it, listen, pick the one that's up on a percentage basis. Take a shot, because if one product is going to miss, what do you think one of the other rails isn't going to miss their numbers or isn't going to guide lower, right? And that's, again, we always look for advantageous areas in this marketplace. Now, if you're not comfortable with that, you can actually go to IYT, okay? And this is effectively transportation ETF. And the transportation ETF itself is also quite viable, being up about 13%, again, 13% on a year-to-date basis. Maybe not as good as Norfolk Southern. Nevertheless, opportunistic out there. Okay, listen, looking at the transports, I kind of feel that it's an old school methodology. Traders that preceded me and then some always talked about, hey, you got to look at the transports to get a feel. Okay, in this particular case, while the marketplace is kind of sleeping, believe me, those transports, they make a difference. Okay, the transports, they'll reverberate all the way back up to stocks like Amazon, right? In fact, did reverberate into Amazon today, and I don't think a lot of people actually caught that one. The rails aren't doing well. Well, we might not be shipping as much. If not shipping as much, maybe Amazon isn't selling as much. And that's when we start to ask more questions. Now, kind of wrap up this session, we're going to take one last glance at Netflix, which is undoubtedly Mr. Toad's wild ride in the after hours here. As I said, it is well outside of its approximately $26 expected move. That, would take it into the 330, 335 kind of range. We're outside right now. We'll see what the conference call has, okay? But the first of big tech is out, and it is not good. And you can see just that reflected right here in the S&P futures. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.